Hello everyone, welcome to UN College Digital class. So in my previous video lecture, I have covered the insurance basics, principles of insurance and the functions of insurance. In the previous video, we will discuss the types of insurance. So this is what we are going to discuss today. I am Manisha Manaswini Padhy, a lecturer in the Department of MCom in Finance and Control. So let's start with today's video. If we take into consideration the overall distribution of insurance, there are two types of insurance, life insurance and general insurance. The general insurance is otherwise known as non-life insurance. Life insurance means which is taken for compensating if anyone loses his life. There are different type of life insurance policies which we will discuss one by one. In today's video lecture, we will discuss general insurance. This includes many type of insurance like fire insurance, marine insurance, social insurance, liability insurance, etc. So most important types of principle under general insurance is fire insurance and marine insurance, which we are going to discuss today. Fire insurance is a contract of indemnity and the insured cannot claim anything more than the value of goods lost or damaged by fire or the amount insured, whichever is less. The contract of fire insurance does not help in controlling or preventing the fire, but it is a promise to compensate the loss caused by fire. So fire insurance is an agreement between insurer and insured under which the insurer agrees to indemnify the loss caused by fire to the insured in consideration of certain payment called premium. So fire insurance is a contract of indemnity. What does this mean? This is what we have already discussed in the principles of insurance, that is principle of indemnity. Ki either the loss amount or the actual amount, whichever is lower, will be compensated. Fire insurance is known as the contract of indemnity. It means if a person is taking fire insurance for his or her factory and a kind of loss happens, then either the loss amount or whatever the insured amount is there under that insurance contract, whichever is lower, will be compensated. Taking fire insurance doesn't mean it checks the fire insurance. The insurance company cannot stop the fire which is going to be there in your factory, but it provides certainty, it provides protection that if your factory catches fire within the particular time period of insurance contract, then you will be compensated. Fire insurance is a contract between the insurer and the insured, whereby the insurer agrees to compensate the insured if any kind of loss happens relating to fire, against which the insured has to pay a certain amount which is known as premium. If premium will not be paid by the insured, then the insurer will not be able to compensate if the loss happens. So there are certain features of fire insurance. First one is contract of indemnity. I have already discussed this, that the contract of fire insurance is a contract of indemnity. The insured cannot claim anything more than the value of goods or properties lost or damaged by fire or the amount of policy, whichever is less. For example, a person has taken fire insurance for his factory and the insured amount is 20 lakh rupees. After some time, his factory got fire and he incurred a loss of 15 lakh rupees. So in this case, the insurance company will compensate only 15 lakh rupees on the basis of the contract of indemnity. If we take the reverse case, the insured amount is 20 lakh rupees, but the the insured got the loss of 25 lakh rupees. In this case, the lower of the two will be compensated, that is 20 lakh rupees. So this is what contract of indemnity is. Next is offer and acceptance. We all know offer and acceptance is the basics of a contract. Before signing a contract, these are the essential elements. The contract of fire insurance is the outcome of the offer made by insured and its acceptance made by the insurer. The insured here, the potential insured here makes a offer to the insurance company that I want to take a fire insurance for my company. For this, the insured has to fill up the proposal form and there are certain procedures. So here offer is made by the insured, and if the insurance company is satisfied by the insured, then he will accept the offer and the contract will be done. Next is premium. Fire insurance policy is issued for a lawful consideration, that is premium. Without premium, no insurance contract will be valid. Whether it is fire insurance or marine insurance or a life insurance, without premium, no insurance contract will be valid. Premium is the basics for taking an insurance contract. Once first premium is paid, then the insurance company will be liable for compensating the loss. Till the time premium is not paid, insurance company is not liable. If in that time period loss happens, then insurance company will not compensate. So premium is the basics for taking an insurance contract. Next one is insurable interest. The insured must have insurable interest in the properties insured at the time when policy is taken and loss occurs. Insurable interest is also a principle which I have discussed. It tells that a person taking fire insurance for a factory should have insurable interest in that factory. It means that person should be the owner of that particular factory, otherwise he cannot take insurance for that factory. This is principle of insurable interest. Next is payment of premium. Premium is required to be paid at the time of taking a policy. This is we have discussed earlier. Next is policy duration. Fire insurance policies are issued usually for 1 year duration, but in some cases they are also issued for a shorter period. Last one is outcome. The loss must be the outcome of fire only. So these are the features of fire insurance policy. There are more features also, that is principle of subrogation. It means the scrap or whatever is left of the goods or properties after damage by fire, it automatically passes on to the insurer after the payment of the claim. So principle of subrogation says that after the compensation is done, if any kind of scrap is there, if any kind of goods is left, then that goods or that scrap or profit from that scrap belongs to the insurer. Insured has nothing to do with it. This is included under principle of subrogation. Next comes claim settlement. The claim may be settled in cash or by rehabilitating the goods or properties damaged by fire under the field insurance. So next we will discuss the procedure for taking a fire insurance policy. There is a certain procedure for everything. So first step is selecting the insurance company. First of all, the insured selects a financially strong and efficient company. The company which requires less formalities and easy terms for taking a policy is always preferred. First of all, this is the duty of the insured to select the insurance company. There are a lot of insurance companies providing insurance, fire insurance or life insurance or marine insurance, whatever. So this is the duty of the insured to select a good insurance company which will be easier in terms of payment. This is the first step which should be done very carefully, otherwise the insured should be in loss. So next point is proposal form. The insured has to fill up the proposal form to get insurance policy. The insured is under obligation to give true and correct information about the details of the property, its location, amount to value of property. So proposal form plays a very important role in this. The insured has to go to the office of the insurance policy, or there should be an agent of insurance company. The insured has to fill out the details in the proposal form. Here the details should be like name of the insurance, name of the potential insured, address of the properties, how old that property is, location of the property, etc. All the details should be filled up by the insured, and that particular proposal form should be given to the insurance company or to the agent, whoever is present. Next one is evidence of respectability. The insurance company collects the proofs of honesty, integrity and financial position of the insured from the third parties. The insured has to submit a certificate of respectability along with the proposal form to the insurer. Okay, when we were in our colleges or schools, at the time of passing out, we got our conduct certificate. Why? Because this is needed for our higher education. Similarly, if we go to take a loan, we should have our CIBIL score. The bank will be learning, the bank will be checking about our credit character. This is how for at the time of taking insurance, a certificate of respectability is also needed. So this is the duty of the insured to collect a certificate of respectability, which defines the honesty, integrity of the potential insured, which will be help the insurer to collect information about the insured, to collect the credibility of the insured. Next is survey of property. The insurer has to assess the property to be insured to determine the risk involved in the property against fire. So after the certificate of respectability is given, so next duty is of the insurer to survey that particular property. So there are certain investigators are there appointed under an insurance company. They will go to the field and they will study ki what are the machineries are there, what will be the risk amount, what can be the insured amount, according to which premium will be decided. For example, if my factory will not have fire extinguisher there, so here there is a more amount of risk. So here the insured amount will also be higher and the risk is higher. So this direct to higher premium. This is what is done under the survey of properties, which is done by the insurance company before signing the insurance contract. Next is acceptance of proposal. On the basis of the information declared in the proposal form, certificate of respectability and the reports of the surveyors, the insurer gives his acceptance to the proposal submitted by the insured. The insurer sends an intimation of acceptance to the insured mentioning the premium payable. Proposal is always accepted subject to the payment of premium. So whatever information is collected by the insurance company by proposal form, certificate of respectability or after the field study of the surveyor, after that the insurance company decides whether to accept the proposal or not. If the insurance company accepts the proposal, so it sends then an intimation to the insured by detailing there the payment of premium, how will be the structure of the premium, what amount will be the premium and other terms and conditions which will be included at the time of doing contract. So after this, this is up to the insured whether to enter into a contract or not. So next is issue of policy. Finally, a fire insurance policy is prepared in a proper form, duly stamped and signed, containing the terms and conditions of the insurance. The policy contains the name and address of the insured, value of or amount insured, contents and subject matter, period of insurance, amount of premium, etc. This insurance policies is issued by the insurer to the insured in due course of time. If the insured accepts the intimation letter which is sent by the insurer, then he will come to the insurance company and accept the insurance contract, and then a valid insurance contract will be signed between the insurance company and the insured. This contract contains all the details, name of the insurer, name of the insured, what are the details, what will be the premium, and this insurance contract will be properly signed and duly stamped and registered under Indian Contract Act 1872. So after this, insurance contract will be valid, and after the payment of first premium, the insurance company is liable to compensate if any kind of loss happens. So next is our marine insurance. As the name suggests, marine insurance is basically made for water. Marine insurance is the oldest form of insurance. It is concerned with the foreign trade conducted through sea routes. Marine risks are usually related to ship or cargo. The businessman and the owner of the ship always want to ensure the safe arrival of their cargo and ships. Marine insurance covers a large number of risks including sinking, burning of ship, accidents, stormy winds, collision of ships, etc., which causes losses to the ship and cargo. As the name suggests, we all know that marine insurance is related to any kind of insurance which is related to risk, related to water. Okay. So, marine insurance is the oldest insurance. This was the first insurance which was introduced. The marine insurance is taken basically by those persons who are included in doing foreign business, export or import. This provides protection against any kind of loss which happens in the ship, whether it is a kind of stormy wind or burning or water consumption, etc. So, next we will go to the features of marine insurance. Marine insurance is based on the contract between insurer and insured. The insured is under an obligation to pay certain amount of premium as consideration. Cargo, ship and freight can be insured under marine insurance policy. The insurance may be for a single journey or a number of journey during a specific period of time. Under marine insurance, the insurer only guarantees to compensate the loss caused by sea uncertainties. There are two subject matter of marine policy. First one is cargo insurance, second one is ship insurance. Cargo insurance tells when the goods are loaded on a ship, those are insured, then this is known as cargo insurance. If the goods are only the goods are insured, then this will be known as cargo insurance. So, what is ship insurance? If the ship along with the goods are insured, then this will be known as ship insurance, which is otherwise known as hull insurance. So, here this is the procedure for taking marine insurance policy: selection of insurance company, making the offer, acceptance of offer, payment of premium, cover note, then issue of marine insurance policy. So, first step here is selection of insurance company. So, this is the duty of the insured, the potential insured who is interested to take marine insurance policy. That person will take up that insurance company which are easy in their terms, which will compensate earlier, and this is the duty of the insured. So, after the selection of insurance company is done, then the offer making procedure starts. The insured has to make an offer by the proposal form. The process is same as of the fire insurance. The insured has to fill up the proposal form along with the details of the ship and the longevity of the ship, etc., and the insured has to submit that proposal form in the insurance company. Then the duty of the insurance company starts. Next step is our acceptance of offer. As per the proposal form, insurance company can accept or reject the application of proposal. So, the proposal is checked properly before it is accepted by the insurance company. Next one is payment of premium. If the insurance company accepts the proposal, it determines the amount of premium payable on the policy. The amount of premium is determined and on the basis of goods, ship, type and mode of packaging, etc. So, next one is cover note. Next procedure is cover note. On the payment of first premium by the insurance company becomes liable to compensate the insured. So, in this case, before signing the actual insurance contract, a cover note is issued to the insured. So, here cover note is a type of dummy. So, cover note is also valid for compensation. The company will be legally liable for the risk covered under the contract with the issue of cover notes. So, after the cover note is issued, this is the time to make particular insurance contract. Then the issue of marine insurance policy is done. In the meantime, the insurance company prepares a marine insurance policy in proper form containing the terms and conditions of the marine insurance contract. So, this is how marine insurance policy is taken. The procedure is near about same with the fire insurance policy. So, in today's video, I have discussed the general insurance types, most important types, that is fire insurance and marine insurance. In my next video lecture, I will discuss life insurance policies and the types of life insurance policy. You all go through the video, and if you get any doubt, you can ask me in the comment section. Thank you for watching.